What is the secret to getting into these sorts of allocations, first of all, and then what are you looking at next in 2025?
Well, great to be here. Thank you. So we address the marketplace through two key deal channels. So firstly, we invest directly in these companies through primary rounds, but uniquely, we also invest via the secondary market, which involves providing liquidity to early investors and employees. So I wouldn't call it a secret, but what we've uniquely packaged is the ability to partner with these great tech companies and provide them with growth capital, but also be a liquidity provider to owners of stock. And through both of those deal channels, we've built some pretty incredible portfolios.
How much easier, Robert, is it to access ByteDance on the secondary market right now? How much are you focusing in on that company and the concerns around TikTok?
Well, I don't want to comment on any particular company.
Why not?
At this
You
moment.
own it.
I can't comment on any specific companies or fundraising at the moment. But what I can tell you is, as a firm, we are laser focused on what we've called the global tech leaders.
So why is ByteDance therefore still a tech leader?
Well, look, ByteDance is obviously an incredibly large company. So it's been very successful with its business model, amongst many other companies like Figma, Rippling, Anthropic. So we have these 30 companies that we've isolated that we think will accrue a disproportionate amount of value over the next 10 years.
You must have been taking calls, though, from investors that are perhaps worried about the geopolitical influence on some of these key names. Has that been a key concern for any of them?
So the way we invest is we don't take any extremely outsized positions in our funds. So we have certain parameters around percentage of portfolio, et cetera, so that any one company never represents 20 or 30% of a portfolio. So the feedback we've had from our investor base is that they want to continue backing Goanna, because as we look forward, in my opinion, there's never been a more exciting time to be investing in technology with these secular tailwinds, AI, software, data infrastructure, et cetera.
Robert, you just brought up AI. That seemed to be such a focus in 2023 and especially last year. But what about quantum computing? We did see a bit of a brushback pitch thrown at this technology by Jensen Huang. How does that affect your thinking toward quantum and toward other areas?
Yeah, look, so we can't, as I said, I can't focus or bring up any specific companies, but when we look across a number of subsectors within technology, software, data infrastructure, and AI, I think there is an amazing tapestry of opportunities over the next 10 years. Some of those companies that we're really excited about are Rippling, Anthropic, Figma, amongst many others. And so we're laser focused, as I said, on these global tech leaders and partnering with our investor base on helping them get exposure to those really important companies.
Robert, how does the change of leadership here in Washington affect the way you view the table of opportunities that's been set in front of you and your company?
It's certainly very exciting at the moment. So I was just in Australia and Hong Kong, and what I can tell you globally, though, is there has never been more interest, at least in my career, in investing in the United States, and specifically investing in US private tech companies. The world right now wants more exposure to the US and US tech companies than I have ever seen.
And yet, the valuations are pretty frothy. If you're looking at yet more and more $3 trillion companies that are publicly listed, are you starting to hear that there's a worry about we're hitting a top level with some of the market capitalizations on the private market? How long can we sustain these levels?
I don't think so. That's not too much of a concern. I think when you look at multiples in public markets, while they're certainly not cheap and they're full, I don't think they're bubbles at all. For the mega cap, there's multiple companies that are around 20 times earnings, which is, I think, quite reasonable given the growth profile, and the earnings they generate. To be clear, we obviously focus on private markets, not public markets. And so for us, our timeline is over the, let's call it 3 to 7 year type outlook. So when we look at these companies, we're looking into the years, not the quarters. And as I said, when we look at the global tech leaders that we're focused on for the next few years, we've never been so excited.
A couple of outliers that are on the public markets, like Palantir or Tesla, trading 170 times future earnings. So there are some outliers, obviously, and I'm interested as to whether or not you're frustrated that there aren't enough outliers actually going public.
Well, we enjoy some of these companies staying private longer. Obviously, that's the universe we focus on. So we're not frustrated. But I think what's important there is these decisions to list by some of these companies were made, let's say, 18 to 24 months ago when markets were very different. And so I think what you're going to see is the plans to list were made 18 or 24 months ago. And so I think for investors, there will be a lot of exits for those in private markets over the next 2 to 3 years.